Hi traders, welcome back to the channel. I think it's no secret that I'm a big fan of buying the Japanese yen in 2025. All you have to do is check out my previous videos here to know how much I'm such a fan of it. But should you go and buy it right away? Well, maybe not. See, I use the commitment of trader reports a lot in my trading analysis. I think it's a really good sentiment tool that helps me stay out of positions that could be about to turn, but also helps me identify potential opportunities within the trends of the market. So I'm going to take you to those commitment of trader reports. I'm going to break down my theory on why I think the Japanese yen is still a good currency to be a buyer of in 2025. We've got to wait for a good opportunity. I'm also going to take you through dollar yen and Swiss yen, as I think they're two currency pairs that you should really be keeping your eye on going forward as a trader. I've been personally selling the Swiss yen. I've sold it 4 times this year already, and I'm looking to continue that potential downward play. So I'm going to take you through those as well. So let's go jump onto the commitment of trader reports, and I'll show you exactly what I'm breaking down. So as you can see, I've got a report here. This is just a table view, and what we have here most importantly are some real key facts. So first of all, you can see that we're on currencies, but we also have things called the 52-week high and the 52-week low, and then we've got the dates of the commitment of trader reports. Now, COT reports are lagging reports, okay? The data is collected on a Tuesday by the CFTC, who governs the commitment of trader reports, and then it's released to Joe Public on a Friday. So we are seeing a week prior in terms of data, which does mean that the indicator or the reports are lagging ones. Now, a lot of traders think that that means that these are worthless, but to me, I think they are crucial because it gives us just a little bit of insight to what institutions are doing, and that gives us, the retail trader, a good opportunity to see where they're positioned, okay? Now, let's take a look at the Japanese yen. So you can see the Japanese yen here. Now, what I want to point out first of all is those 52-week highs, because basically, the net contracts over a 52-week period, okay, the highest they have been are 66,011 contracts. When we take a look at the most recent report that was released on February 18th, we can see that they came incredibly close to reaching that 52-week high. So you can see those contracts are at 60,569 net. What you can also see is that since January of this year, they have been increasing the long side of their contracts. You can see that because we started this year, or the second part of this year, at minus 29,000 contracts. We then went to minus 14, minus 900, positive 18, positive 54. So it's basically been telling us that the institutions have been buying on a weekly basis the Japanese yen. However, where we have to be careful as retail traders is when they start to reach what I call extremes. That means they are reaching levels that we either haven't seen before or reaching levels that we have seen before, and it's signaled a turning point in the market. This is where I think we're getting pretty close to at the moment for the Japanese yen. Okay, now let's just kind of deviate and say, why are hedge funds buying Japanese yen? Well, if you're not familiar with the previous videos, I explain in those that the Bank of Japan are going to potentially hike interest rates a number of times this year because they want to try and control the inflation rate in Japan. Inflation has been growing because we've seen an increase in wages. What does an increase in wages do? It allows consumers to spend more in the economy. If they're spending more, demand goes up. If demand goes up, prices go up. That is inflation. So what a central bank tries to do is get ahead of inflation getting too far out of control, and they will hike interest rates to try and keep the level of demand at a reasonable level, okay? So that's why hedge funds have been buying it, because when you look globally at the moment, most central banks are cutting interest rates, whereas the Bank of Japan are hiking interest rates. So they are the outlier when it comes to central bank policies at the moment. So that is a great opportunity for hedge funds to get involved with that currency. Now, what I'm going to do is just dive in a little bit deeper to the reports, because what we can do is open up the chart here. And you can see we get this kind of line graph at the bottom. What this line graph represents are the hedge funds, which are the green lines, okay? The red line is the commercials, so those that are in the market just for business purposes, for hedging purposes. And then we have the non-reportables, which are sort of too small to really make a difference to the report, okay? So when I click onto this, I can just segregate these. And what I'm going to do is just separate them and only show what the hedge funds are doing, which is the large speculators, okay? They are speculating on the markets to make money. And what we can see is something quite interesting. First of all, what I note is the fact that current contracts, right, that we can see, that we know from the report, up at that 60,569 level, are reaching those that are similar to these that happened back in September. Now, this is the Japanese yen futures chart, okay? So when you think about dollar yen, you need to just inverse it, okay? So if I actually just grab this compare tool here, and I'll just type in US dollar, Japanese yen, and then click it on, click apply, you can see that the dollar yen is just inverse to this, right? So when the Japanese yen futures move lower, dollar yen moves higher, okay? So that's just to kind of give you some kind of reference here. But what I noticed most importantly is when we were in here in September, what happened to yen futures? Well, we were breaking higher. We had intervention back in July. The market rallied higher. What we then saw was that long contracts reached a significant level. In fact, it was a level that we hadn't seen since 2021. Okay, and you can see what happened in 2021 when long contracts reached that level. We saw a huge turnaround in the market. Okay, we haven't reached those levels in a significant amount of time. Now we're back there. We're back at that level. So it's telling me that maybe, again, it's not 100%, but maybe we have to limit our expectations of what happens here with the Japanese yen. We might be in an area where we see another potential sell-off in the market. If we look at history, what has it showed us? When contracts get to these similar levels, we can see the market falls off, dollar yen moves higher, okay? Similar contract level, we sell off. Not so similar, a little bit lower, but we got a long contract signal for the longest level that we've seen in a while and sold off here. Again, sold off, okay? Now, there are some differences to this current market and those previous market conditions, namely the fact that the Bank of Japan are in a hiking cycle, okay? The last time they were really in a hiking cycle was 2008. So we can go and try and compare what happened in 2008 here on the contracts as well, because we can just zoom out and highlight that in 2008 we also reached similar levels. But what happened in 2008 is we'd see a sell-off for a few weeks, the market would then rally again back into all-time high contracts, we'd see a move down again, and so on and so forth. Okay, so you can see all these areas here where we see those kind of pullbacks in the market. So I still feel like the Japanese yen futures are going to continue to climb, very similar to what we happened in 2008 and 2009. And the reason why I say that is because we're in similar conditions to that. But what I'm saying right now is that although we've seen a really nice kind of rebound here from Japanese yen recently, and I've been a buyer of the Japanese yen through this period, I feel like maybe we are reaching a short-term top where maybe, just maybe, dollar yen futures or yen futures are going to start ranging between these levels, which could mean dollar yen ranges between these two levels here. So I do like the idea of being a buyer of the Japanese yen, but it's also important to note that when you should try and back off that move a little bit, not get too fixated with it, and then try and exploit that when we do get a good opportunity. Because if I go over, let's say, to the dollar yen chart, And I look at this market and I think, well, this is great. This is a weekly chart. When price broke this trend line, I was very much happy to be a buyer of the Japanese yen. Why? Because it was telling me that the sentiment had changed within the market, right? Big change in those prices here. This would have been a really nice area as a technical trader, right? Because a lot of people technically trading would have seen this as a higher high, higher low pattern. We tested previous highs, we're at trendline support, buy. But what you have to realise is that the fundamental conditions were more favouring Japanese yen strength. Price broke to the downside. We're now trading at a very significant level around this 149 handle, which was previous lows. So think about it. If you're a hedge fund and your job is to get the best possible price on a market, is this the best possible price? No, it's not. Okay. Does it mean that price can't break through? Absolutely not. But I think if I was risking money at a hedge fund level, I would want to see price come back a little bit. Okay. Whether it's back into sort of 156 and you could argue that you get like a head and shoulders pattern, or whether it's a move all the way back up into 158. I think these levels here, I am more interested in buying Japanese yen again than I am right at this low. Now, the only other thing is, if price does break out, then at least we are getting confirmation that the Japanese yen is really, really strong at that point. Dollar is getting weaker and that we might see the 142s. Then I will be more than happy to start buying Japanese yen. But at the moment, we are at a critical point. If I was to sell here, where would I have to put my stop loss? Well, the safest stop loss is all the way at 160, right? That doesn't make sense for me as a trader. It does not make any sense for me. So I need to see price pull back, and then I'd look to try and exploit any kind of moves here. Now, it also depends if we get that type of pullback, because, you know, the market could find some buyers down in here for a few days, come back into daily areas of resistance, and then continue down. That's absolutely fine, because I will look to short dollar yen at this level here if I get the right conditions. But am I going to target beyond this low? Absolutely not, because the market could just rebound here, break trend, and come up to that key level that I'm looking at. But ultimately, I do want to buy the Japanese yen, but I don't think I want to buy it right now. I think I want to wait to see if we can get a pullback. Another great example of this is Swiss yen. I've been short Swiss yen over 4 times this year, or might be around just 4 times this year, but pretty much every single pullback since the start of the year, I have looked to sell Swiss yen. I even sold on Friday, actually. So 1, 2, 3, 4. It's actually 6 times that I've sold Swiss yen, because I actually sold on Friday back into this low as well. But I think the crucial thing here is on Swiss yen is, again, timing of the market. Do you want to get short at a low? Absolutely not. Okay, why as well? Look at that support where we saw buying coming in the past. If price breaks 166, I'm more than happy to continue to short this market. But where does it make sense to short? Up here, 169, right? Why? Because that's where sellers got involved in the past. What I really like to do is I like to use the risk reward tool to just kind of map out ideas. If I put a short on right now, where would my safe stop have to be? You're going to hear me say that a lot. Up above that 169, potentially up above 170 as well, because that's a whole number. So maybe 170.20, 170.10. So I really want to sell as close to that stop loss as possible, because then it opens up my reward to risk, right? So let's say I just put it on 168 and I just target back down at these swing lows. At least I have a 2-to-1 risk reward ratio there. That's favorable for me, because if I get it wrong, then at least I'm only knocked out. And, you know, if I keep using a risk reward ratio like this, every sort of other trade, if I make 2-to-1, then at least it's making up for those losses. So that's the way I'm trying to view the yen trades at the moment. Like I said, I really like the idea of being a buyer of the Japanese yen, but we have to do it in context. Okay, so I'm gonna leave it there, guys. I hope you enjoyed this video. If you did, please give it a thumbs up, subscribe if you are new to the channel. Remember, we have a free newsletter. I'm going to start sharing a lot of the commitment to trade report data in that, just to kind of give you a heads up of what hedge funds are doing. So please subscribe to that newsletter. It's free, it's in the description, and I look forward to speaking to you there. Thanks for watching. See you soon.